Hey, TikTok, Jim Malone here. It is May the 6th. I hope everyone is healthy and safe out there. Very interesting day in the market. Looks like the market is moving up, and I have moved myself out of cash, and I'm into several other positions. Just a very interesting market. It looks like we're going to be we're having some very interesting earnings calls. As I indicated yesterday on my show, I had a trade on Disney. It looks like Disney is strengthening, which is amazing because their revenues are going to be off tremendously, and it's an interesting, it's a really interesting situation out there. Just wanted to say hello. I'm going at a new time, which is 1:30 Central. For anybody out there looking on, that's found me on LinkedIn or on Twitter or some of the other platforms out there. And I just wanted to get to it. Let's see. Let me just show you the market trend as it sits right now. And that is there you go. I'm still muted on the mic, so hold on. Let me see if I can unmute that mic. All right, hold on one second. Unmute the mic, and we're gonna go with the video. So here we go. And hopefully that played. We shall see. It's moving slowly again, but we will see. So there we go. The market is generally up, as you can see. We've had good movement in the market. The S&P is up, as well as the Dow Jones, and the Nasdaq. The volume's down a little bit, but we seem to be trading well. So there you go. It's just a very interesting market situation as it stands now. Just wanted to show you very interesting movers on the market. And if you're on TikTok, I'm going to be simulcasting this live on YouTube. The YouTube address is youtube.com/c/Dallas Trading Floor. So you should be able to see that on YouTube right now. I have a chart up on Shopify. Shopify made a huge move, a huge move today. It's up almost 5%, which is absolutely amazing, considering it's amazing, considering how expensive the stock is already. It's part of, I guess, the stay-at-home the stay-at-home trend in the market. It's up $35 a share. This is almost like a Tesla. It's just amazing. Just for sake of full disclosure, I don't own this stock right now. but I will probably be considering doing an options play on it. Had very good earnings, so there you go. It's just an interesting time in the market. Now the next slide I have up is for PayPal. This stock is really you should consider this stock. I purchased 100 shares of this just before we went on the show, and I'll show you the trade that I made and the potential profit that is in this trade. It's about a 9-day trade, so it's quite easy, and I think you'll find that that's a very profitable trade. So PayPal is definitely one of the stocks that we're seeing, tremendous, just tremendous response in. Just for sake of full disclosure, I'm in Microsoft. I'm also in. Oh, no sound. Oh, sorry about that. Okay, well, I appreciate you. Hopefully, I should have some sound now. I had a little bit of difficulty with the video. I'm still learning my way around, so it's just really strange. You seem today nuts. MGNX. Let me quick look at that. Just really quick, for somebody here on Twitter, let me look at the chart on that one. MGMX. Let's see if it comes up. Yeah. Okay, this is the JP Morgan MGXX. Is that MGNX? I'm sorry. Didn't get that quite right. MGNX. There we go. Microgenics. I'm sorry, I didn't have that correct. And here we go. Microgenics is up. Wow, look at that. It is up $15 a share. Wow, that is really, really interesting. 200%. Wow. Huh. I don't know why that is the case. It's just that's an amazing number. I don't know exactly what they're in, but Microgenics, it looks like they may have something very significant. Who knows? I mean, that's the kind of move that. Let me see if there's any news on Microgenics here. For any reason for that to. No, there's not really anything. So I can't really. This sounds like it sounds fantastic. That's just amazing. How can we hold Shopify still? Well, here's the thing about Shopify. Shopify is just an absolutely wild ride. I'm going to switch back to that chart here just in the second. Let's see if I can get it back up here. Oh, that's the call. Yep, there's the move on Shopify. Look at that. If you look at the chart here, it's just it's quite amazing. I mean, as you can see, it's just let's see if I can get the pointer over there. Maybe not. Yep, there you go. If you can see that, you can see how it's actually gapped up. So that is just incredible. I think it has to do just largely with with the fact that everybody now is moving to Shopify. I mean, with everything, with all the social distancing, I don't think that anyone really can operate a retail business in a physical location. So Shopify definitely is, is definitely uh, uh, appealing to that audience. So it's quite tremendous. Let's see, Raj. Let's see if I can put your comment up on here in a second, and hopefully that'll come up. So let me see if I have another one from TikTok. Let's see. All right. Yeah, I just don't know what that MGM Next is. That's an amazing. That's just an absolutely amazing number. That's just an absolutely amazing number out there. So I can't I couldn't tell you exactly what it is, but it is truly amazing. It is truly amazing. So so that's just something that I can't really explain. But anyways, I wanted to show you a covered call. This is a 9-day covered call trade that I made this morning on PayPal. PayPal has a very good chart, and I believe it's moving higher. Basically, I bought 100 shares of PayPal at 127.89, and then I simultaneously sold a covered call. This is a May 15th, 2020 call, receiving $3.49 for that, for a total of $349. And basically, if PayPal closes at or above 130 on May 15th, I will make an additional 185. That's the difference between the strike price and the price I bought it at, for a total return of $534. This is a 9-day trade, or about a yearly return of 166%, or a period return of about 4.1. I have 9 days. I'm going to have 9 days in this trade, and that'll give you kind of an idea of how I like to trade. Now, when I go long on a stock, typically I use the covered call if I'm bullish on the stock. I'm currently bullish on Microsoft. I'm currently bullish on PayPal, and I'm also I'm also bullish on Facebook, because it seems like the money is moving back into these mega cap tech stocks. That's why when I come into the position, I basically will buy the shares, and then I will move to sell an option. And then once the option is been sold, I will then wait, and then hopefully the stock will advance. If it doesn't quite hit the strike price, of course I keep the underlying premium for selling the covered call, and then typically I'll wait another week and sell another call on that. Or if it exceeds that price, I'll then automatically be sold out of the stock, making a gain. And this is how I like to do it. So I like to go week to week. Currently, I am doing this on Microsoft stock. I also, as I said, have a position in Facebook, and I did an options only trade in Disney, where I sold a 101 May 8th call, and then I purchased a 102 may call for the same date. So if the stock trades below 101, I keep the option premium, which is the difference between what I sold the options for and what I bought the options for, about $470. Or if it goes above that, I then get some of the other options trade. Currently, it's trading in the mid range, about 101.20. Hopefully that will change. If it goes below, then I will keep the entire the premium. And if it goes above 102, then I will also gain the difference between the option, the 102 option, and whatever the strike, whatever it settles for on the 8th of May. So this is called a bull call called spread. And I like to do these spreads because I don't have to purchase the underlying security. So if I'm a little bit unsure about the stock, like I was on Disney, then that's how I do it. I typically will do these 3 days. I will enter these trades 3 days before the earnings are announced, and that way I typically get the best action on the price. So that's kind of that's kind of the way I like to trade them. So let's see if I can get this comment up here. Dow Jones and S&P are acting. It's not letting me show this comment. So hold on here. I'm trying to show there we go. Hopefully this comment will come up here in just a second. Let me take another question here. Okay, following the host. Excellent. Thanks, man. I appreciate it. I appreciate everyone. About Oxy. Do you know something will happen next month? Well, here's the thing about Occidental Petroleum that I think you really have to be you really have to be careful with. Occidental Petroleum way overpaid for their acquisition of Anadarko, and they had to go to Warren Buffett, and Warren Buffett charged them, I think, 13.5% for that acquisition. Unfortunately, the price of oil has been driving through the floor. So I don't believe Occidental is a good buy, because I don't think that it may survive. I know that's hard to believe, but it may not. So let me get a quote here for Occidental. Occidental is down today. It's trading at 13.72, and I'm just looking at the chart here. Yeah, the chart is it's just awful. I mean, I don't think you want to be in this trade. I don't think you want to be in this trade. I'm certainly not in this trade, and so I hope that I hope that that you're not either, because I think this is actually going lower. I just wanted to show you another chart of PayPal up here. This is on my live feed on YouTube. As you can see, the chart on PayPal is very good. This is the reason I bought it, is because we had a situation where it exceeded the high, and that's really when you want to buy stocks. You want to buy them as they're making a new high, and it just so happens that PayPal is making a new high. That's why I did the covered call on PayPal. Um, it's a very good time to buy the stock. Typically, is when it's making a new high. It's not like real estate where you try to buy bargains. In the stock market, the best thing to do is to buy on new highs and then sell higher. So it's a little bit different of a strategy than you use on other on other things like real estate. On with the stock market, you want to buy the highs and then sell higher. And the way you can protect yourself when you're doing that is to find stocks that have good chart patterns, such as PayPal. As you can see, it moved down here with the market, but then it's moving up strongly. As you can see, 91, that's the relative strength line. That means that the action on PayPal is exceeding, it's in the top 9% of the all of the market. And as you can see, there's blue bars here. This means this is strong buying. This is strong buying. As you can see, the strong buying has come in. This is the weekly chart. This is the one you want to analyze more so than the daily or the intraday chart, because this is going to show you where the levels are and where the buy points are. Again, PayPal, I think, is going to do well. I have a 9-day trade on it. We'll see what happens. Now, I want to show you another trade that you might be interested in. This is a little bit higher risk trade. I'm currently not in the trade, but I am going to probably, depending on what the action is like tomorrow, I'm probably going to enter a trade on Virgin Galactic. Why? Because they just signed a deal with NASA. It's amazing. And interestingly enough, they do have a full order book. It's just incredible. I wouldn't buy Richard Branson's airlines because I don't think they're doing well, but I think space travel is very different in this time of COVID-19. I think people are very interested in that. As you can see from this chart, there was a blow off top. I've been in this stock before. I was in it at basically 24 up to about 35. I then sold because of the way I do my stop losses when it started to retreat. I believe now it's potentially going to move up again in the market. And as you can see on the relative strength here, it's at a 95. That means it's outproducing. It's better than it's better than basically all but 5% of the market. So definitely something you want to look at for Virgin Galactic. This is a relatively short-term trade. I believe Virgin Galactic is going to retake its level at about 21. So there's some potential here. I think you could make on 100 shares, you could probably make a few $100 probably in about 10 to, I would say maybe a week or two, depending on how the action of it. I would buy this one without options, just the underlying stock, and then I put my stop loss very, very tight on this with a 5% down. So for instance, if I bought at a 17.98 price, I would be looking to put my stop loss just 5% below that. So I would want to be, I want to be a stop loss at about 16.15 or 16.30 in that range. And that would give me a good safety margin if the stock did reverse and moved lower. As you can see on Virgin Galactic, this was I took this slide just earlier, just before this broadcast, and it had a significant move up 8.8% basically, and you've got heavy volume. When you see this kind of action where there is heavy volume, it's up 40%, and you've got this huge increase in terms of relative price. It's up 136. Then you can see that the money is moving back into this stock. Remember, you just kind of want to go with the herd. If the money is moving into a stock like Virgin Galactic, you move in with it. And then as it moves out, you sell it. So that's one of the main things you want to do, is just kind of see where the market's moving and then move with that market. Okay, let's see. I have some other, say, from TikTok. Oh, wow, I've got a lot of questions from TikTok. Sorry, I've been neglecting you here. Friday job numbers are going to be rumored to be S. I think Friday numbers are going to be horrible in the job numbers. I think it's going to be as bad as the Great Depression. I mean, if you can believe that, I think it's going to be just horrible. So that's why this market is really the tale of two cities. You've got some parts of the market like Microsoft, PayPal, and stocks like that are doing, relatively very well. And you've got other ones in the market that, frankly, they can't catch a break. It's just amazing. I mean, they just can't catch a break in the market. So it's a very, very interesting market. I would totally be out of the retail stocks. Any retail stocks out there, boy, I would be really careful with them. I would not be looking to be in those at all. It's just too dangerous. So I think you're absolutely right about that. Got all my capital in the market. You know what? That's not a bad idea. As I say, I mean, a few days ago, I basically issued a go to cash order. Well, I went all to cash, and I was just waiting to see kind of what the action was going to be. I believe that in some of the stocks, the action may actually be very good. So that's why I moved in. But again, I covered myself. I've covered my positions. The way I did it is I moved into very strong stocks on very strong fundamentals. For instance, Microsoft. For instance, PayPal. For instance, I mean, just the normal suspects. But I hedged my position by selling a call option basically 1 week out, and that gives me downside protection. And then for further protection, I then set a relatively tight stop loss at 7% less than I paid for it. Now, if the stock moves as I believe and it moves up and I'm sold out, great, I make some money there. But I'm not risking. I'm very tightly hedged. You've got to be hedged in this market because it can reverse on you very quickly. Also, it seems as if the best names are the best names are doing better, and everybody else is not so much. So, I mean, there's tremendous amount of capital moving into Microsoft right now. I don't know if that's good or bad, but I'm there moving with that capital. Will I be in that long term? Probably not. Because, I think that once the capital moves in, it won't be nearly as good a stock. as it is right now. But right now, the capital is moving that direction. Facebook is the same thing. Facebook is moving very strongly, and I think it bears watching, because I do believe we're going to see again really nice nice movements. Raj M on YouTube basically said, the S&P is acting so detached from the Nasdaq. Raj, you're absolutely right. I mean, it's just the strangest thing. I think what it is that the safe haven now in the market are these mega tech growth stocks. And really, you've only got a few names in there. I'm going to put up some of the names here in just a second of the long-term leaders that I think, you just really need to be cognizant of, because it just seems as if this is where the market is going. You've got Microsoft, of course. I'm in Microsoft, just for full disclosure. Apple, I was in Apple. I had an option position in Apple. I did very well in it last week when they announced. PayPal, I just went into PayPal today. The only two that I'm not currently in are Adobe and AMD, and they're all up today. So it just seems like that is the safe haven. That's where people are going in the market, and I just wanted to put that out there. So, okay, any calls? Any calls on space? I think space, which is Virgin Galactic, by the way, SPCE is the symbol on that. I think it is actually, and I know this sounds kind of weird. I would have never said this. I think it's a bargain right now. Why? Because I do think that the wealthy are going to be able to do this, and they have a full order book right now, which is absolutely amazing. I mean, as you can see, there was a blow off top. Now, what causes a chart pattern like this? I just want to show you this chart pattern. You can see that it just goes way up and then way down. And what's going on with that? Why is it like that? Well, the reason it's like that is because that is not people buying just because they think it's such a great stock. Well, the reason that chart pattern happens is because there are a lot of shorts. There are 20 or 30% of the short. There's short interest in that stock. They're shorting the stock. Basically, what they're doing is they're selling the stock, and then they're hoping to buy it back later at a lower price. Well, what happens is if the stock continues to move up, then the shorts have to cover, and that's what causes this what they call blow off top. And that's exactly what happened. Now, those shorts were taken out. The stock moved down with the market, and now it's starting to move back up. But the relative strength line is very strong on this. You have a 95 relative strength line. That means that Virgin Galactic currently, and this is amazing, is outproducing in terms of its stock action all but 5% of the market. So this number at $17, $18, I do not think that is too. I think that you're going to see some nice movement in the stock. So that's my opinion on it. There are options on Virgin if you want to play it with a little bit more power, and you have a little bit higher risk tolerance. You actually might consider buying some calls on this. Now, here's the thing about buying calls: 70% of the time, when you buy calls, you lose money. So be very careful. But if a stock has strong upper momentum, that sometimes is a way to magnify your money. Now, here's the thing about calls. Don't buy a call unless the expiration is at least 45 days from now. So don't buy any of the close-in calls because they typically have what they call a decay, a time decay, a theta decay. And that can be very difficult. So you can make the right move with buying a call, but because of the theta decay, you don't make any money. So if you're going to buy calls on Virgin Galactic, which you can buy them, 10, 20 calls on that and magnify your position, you want to buy them out at least for 45 days. I would recommend probably going out maybe as much as 60 days on those calls. If you want to participate, if you want to do a call, if you just want to buy calls. Now, there is another way to do that, and that is to sell calls at a strike price lower than the price currently, and then buy calls at a higher strike price. This is called a spread, and just make sure that they're expiring on the same at the same time. This way, you can have the calls that are that you sell pay for the calls that you buy. So, and this gives you potential a movement on the stock that you can do without having to own the underlying stock. Just for sake of full disclosure, I, in this case, will be probably buying the underlying stock just because of the way it stacks up. So I just wanted to put that out there. Okay, going, let's see. Total market is down. Yeah, I know, this is so incredible. Thank you, man. CIT. The total market is only down. It's just absolutely amazing. And so I just can't figure it out. I mean, I just can't figure it out. We're looking at this tremendous market, and yet, it's just incredible because, we may have 20 or 30%, we may have 30% unemployment in the market, and that's just amazing. It's just absolutely amazing. Now, I just wanted to go over, just to give you kind of another kind of idea on what you could possibly be looking at for a potential buy in near future. And this is on Facebook. Right now, the chart on this is the chart on Facebook. This is the weekly chart. And when you're looking for buy points, you always want to look at the weekly charts, not the daily charts. Now, it's up very, very strong. It's selling at 210. Well, why is the buy point at 224.15? Well, the reason it is because this is when it exceeds its high. As you can see, Facebook has been moving very nicely off the bottom. It's the reason this is a potential buy is because you see this red line here. This is the 50-day moving average. It's above that, and it's also above this black line here. That's the 200-day moving average. And so, interestingly enough, you have a situation where it's moved above the 200-day moving average. Well, that's tremendous because that is showing a lot of momentum into this stock. And this line here is 225.15. Why do you buy there is because that exceeds the high that it made back basically around December 20th or so. You see, that was its high. So once it regains that high, that's a buy point, and it's going to be even stronger than that going up. And as you can see, it's done extremely well. It's up $8 today. It's just amazing. 4%. 4% on a stock that's $200 is a lot. There's just a lot of money moving into this in the stock. So this is an idea of a buy point that you could do on Facebook. Now let's see. Oh, that's my last slide. Okay, well, there we go. Okay, and long-term leaders. Let me. Oh, okay. This is my one on space. PayPal. This is one. Yeah, I want to show you this one on PayPal. And let me just go back here. Yeah, this is the covered call trade that I made on PayPal. This is a moderately bullish trade. It's not a completely, tremendously bullish trade, but if everything goes as planned, it will produce about 4.1% return on your money. So this is the way you can get in and on trade, and it might do very well. This trade would be expiring on May 15. I entered this trade today just to give you an idea of how I sell a covered call and buy a stock that's moving higher. So I bought 100 shares of PayPal today at $127.89. And then you have to have at least 100 share. You have to have 100 share multiples in order to sell a covered contract. I sold a covered contract. One May 15th, 2020 call. It was paying when I sold it $3.49. And if that stock closes above 130 on May 15th, I will get an additional $185 per $185 on the trade. So a total return of $534 if PayPal exceeds $130 on May 15th, or basically a return of 4%. If you can do these, I do these all the time. I do these trades, typically 1 week to 2 week trades, and it's a good way to make some very good income. This is what I do. I trade like this, basically week to week. So there you go. That's an idea of a trade that you might want to consider. So let's see. What are your thoughts on FVRR? Let's see. Let's take a look at FVRR. I'm actually going to my other screen here. FVRR. Let's see what we're trading. This is Fiserv. Fiserv, very good company, by the way. Boy, look at that. Strong. No, is it Fiverr? Okay, Fiverr. Okay. This is Fiverr. I don't know. The gig economy is a really interesting. It's really interesting. The gig economy, obviously a lot of people are going to be working in the gig economy, but the problem that I see with the gig economy basically is that you have certain states, like California, for instance, that are making it very, very hard for people to participate in this, because they're basically saying that, these people are basically employees. And whereas that sounds great for everybody, it's just sometimes it's just not a good. It's just not a good look. I mean, a lot of people can't be Uber drivers because of this, because there just simply isn't enough profit there. So that's one of that is essentially an issue with this, but again, it's up strongly. It's a little bit. I would want to wait on this a little bit. I want to wait on a little bit on this one. I'm not sure that I would buy this right now, but it's definitely on a watch. You definitely put it on the watch list. They report earnings tomorrow morning. Okay, cool. Interesting. Well, you know what? Okay, well, let me just see if there's options on this one. Thanks for Bobby. I really appreciate your quotes. Really appreciate your stuff because you have some very, very good insights. Let me just take a quick look at the option. You can make an options plan on this one. Let's see if I can give you. Let me see if I can give you. Let's see. Okay, let's go to the options here. Where's the options chain? Okay, let's see. Well, okay. Businesses, markets, quotes. I want to see the options here. Gold, oil, most active. All right. Well, heck. Why am I not getting that? Okay. Quotes and research. There we go. All right. Wow, it's up really strongly. Yeah, it's definitely in a buy range. You know, here's what I would do on this one. There is an option that is expiring on. Here's what I would do. I don't know if I would buy the underlying stock, but I would buy I would sell 10. I would sell 10 calls. Let me look at this one. I think that there are 40 calls on this one. I don't know. Here's the problem with buying. Here's the problem with buying a stock before earnings. If you're buying, their earnings can be very can move the stock very, very, very rapidly either way. So if you own the underlying stocks, I don't like typically to be in the stock when earnings happen, be in the physical stock. Now, what I do to get around this, if I really like a stock and I think it's going to be, and I want to do a moderately bullish trade, is that I will sell the underlying. I will sell the underlying option, and then buy the option at a strike price above. So the nearest in the money strike is what I'm going to sell, and the nearest out of the money strike is what I'm going to buy. So what that does is there's typically a gap between those, and that will give you the amount of credit that will go into your account. So you typically have to do these at, with 10 contracts each time. But what this does is this allows you to participate potentially in the stock going much higher without risking the underlying capital. So that's one of the things. It's basically called a spread, and I really like to do the call spreads on earnings. That's really what I do around earnings time, is I'll do these call spreads. So I will get back to you on that. I don't know exactly what the trade with it, but it looks pretty good. I mean, it looks pretty good on the face of it. So there you go. There you go. Shopify is up, and yeah, Shopify is just incredible. It is, it's got to be the most valuable Canadian stock out there. I mean, tremendous. It's like a $700 stock now. Shopify has basically become Tesla. I mean, but everybody needs it. So I can understand why Shopify is just doing great, because there you go. Okay. I have a question from Earl. Let's see if I can put his picture back up on here. What is that on the call? I was showing how I traded PayPal. So let's go back to that slide. Yeah, okay. What is that 185 there? Yeah. Well, that's the difference between, Earl. That's the difference between what I bought the stock at this morning. I bought it for 127.89, and the strike price of that option that I sold was a 130 strike. I probably should have put it there. I didn't just for sake of space, I didn't put it in there. But the option that I sold is a May 15th, 2020 call. It's a 130 call. So if I will be called out of the stock if the stock closes at 130 or higher. So let's say on May 15th, PayPal is selling at the end of the day for 131. Well, if somebody owns a contract to buy it from me, then they're going to buy it for 130. And by doing that, I will get that margin between 127.89 and 130. Thanks. I'm sorry, I wasn't clear. I'm trying to make my charts better. This is called a covered call, and this is a moderately bullish trade. I'm bullish on PayPal